You know, the floodgates for big money in crypto have been creaking open for a while now, but it looks like one of the biggest players in finance just decided to blow the doors clean off. Seriously, we're talking about a move that could unleash trillions of dollars into the market, and today we're going to break down exactly what's going on.
So, over the last little while, we've seen this really clear trend starting to emerge. You've got these major wealth platforms kind of dipping their toes in the crypto waters. Firms like Vanguard started letting clients buy crypto ETFs, and even Bank of America's wealth division gave the nod for some crypto exposure. And look, we are not talking about small fish here. Between just those two, they manage over $13 trillion in assets. That is just a staggering amount of capital getting potential access to this space. But it turns out that was just the opening act. Because a third, multi-trillion-dollar platform just made a move that could honestly dwarf all the others. Yep, we are talking about Charles Schwab. And their announcement, well, it's a potential game changer for the entire crypto world. I mean, just to put this into perspective for you, Charles Schwab has around $12 trillion in capital under its belt. When a firm of that size makes a move this big, the entire financial world sits up and pays attention. It really points to a much bigger trend happening right now. So the core idea here is actually pretty simple, but it is incredibly powerful. The more easy, regulated, and compliant ways there are for big-time investors to put their money into crypto, the more money is going to flow in. It just makes sense, right? Each one of these new on-ramps is like another highway for trillions of dollars. Okay, so what makes this Schwab news so important? It isn't just that they're getting more involved. They already let clients buy crypto ETFs. No, the big deal here is how they're doing it. This new thing is something fundamentally different. They're rolling out what's called direct spot buying. And what that means is their clients can now buy and hold cryptos like Bitcoin and Ethereum directly in their own accounts. Think of it this way. It's like buying an actual bar of gold and putting it in your safe, instead of buying a piece of paper that says a fund owns some gold for you. It's all about direct ownership. Right, so the old way was buying an ETF, an exchange-traded fund. You gave your money to a fund manager, they went and bought the crypto for you. With Schwab's new way, that middleman, poof, gone. You are buying and holding the asset yourself, directly. So why is getting rid of that middleman such a big deal? Well, this new approach brings three huge upgrades for investors. Upgrades that could make this a way, way better experience. First up, trading around the clock. You know, crypto never sleeps, and this lets you trade whenever you want, not just when the stock market is open. Second is instant settlement. ETF trades can take a day, maybe two, to finalize. Direct crypto trades, they happen almost instantly. And third, and this one is huge, zero annual management fees. And just look at the cost savings here. Crypto ETFs can charge you up to 1.5% every single year. It might not sound like a lot, but believe me, on a big investment, that really adds up over time. With direct spot buying, that fee drops to zero. That slow annual leak from your investment, it's gone, completely sealed off. Okay, so let's put all these pieces together. Let's connect the dots. We've got a massive $12 trillion platform giving its clients a way to buy crypto that is more flexible, faster, and a whole lot cheaper than the old way. This is where we get to that idea of a potential crypto floodgate. Now get this. This statistic is incredible. Even with the older, slower, more expensive ETF method, Charles Schwab clients already own about 20% of all the crypto exchange-traded products in the entire United States. They're already massive players. So let's just let that sink in for a second. A group of investors that already makes up a fifth of the US market for these products is now getting a tool that is better in pretty much every way you can imagine. It's faster, it's cheaper, it's just better. So here's the bottom line, the most crucial point. We have a $12 trillion pool of capital. We know its clients already have a huge appetite for crypto, and now they've just been handed a much more powerful, efficient, and cost-effective on-ramp to get into the market. And this really leaves us with a fascinating question to think about, right? If that much money came in using the old, clunky tools, what on earth could happen to the crypto market when this new, supercharged floodgate is thrown wide open for $12 trillion in assets? That is what everyone is going to be watching.